I do have to commend you as a real estate agent. You really have your pulse on everything.
Thank you.
And you do your research, and you've really stepped up your social media game, right?
Yeah, begrudgingly, but I did it.
Yes, you have. And, we figured, well, let's do a quick video every couple weeks, kind of with our thoughts on what's going on and see how it goes. So here we are.
Yeah,
good to see
if
you.
we can educate somebody or add a little value.
Real quick, you've been in real estate for what, about 10 years now?
Yeah, but nine and a half.
There you go.
Yeah.
Yeah, and I've been doing this for about 18. I was in the middle of the Great Recession and all that.
Yeah, I never made it through that.
Yeah, I did, and now here we are, and this is worse. But you know
is
what?
Is it worse?
Oh yeah, it is. It certainly is.
Okay.
At least we had the government back then helping us, and now the government's like not helping us.
They're like gone. You're on your own.
Yeah, and then we had that gravy train that we saw for over a decade, and things are certainly changing, right?
Mm-hmm.
And that's what we want to just kind of give our thoughts on what's changing. Even like I pulled up an article the other day from their RJ, and it says Las Vegas real estate's on pace to have its worst year since 2008. Now,
they just
this is
uplift the hell out of you all the time.
Yeah, I know. What's funny is during COVID, it says, well, right now it says housing, but during COVID, the tab would say hot housing, like hot housing market,
on fire.
Yeah, now it's all doom and gloom, which, quite frankly, there isn't a lot of good things happening in the markets, but there's opportunities for people. But the sales are tremendously down. There's no sugarcoating that.
Yeah,
right?
100%. Yeah, I mean, I think 2 years ago in 2021 we did 52,000 homes.
Wow.
Last year we did like 36, I think.
Yeah.
And now I don't even think we're gonna hit 30,000 homes.
I don't think so. Yeah, we're as the end of September we were at 23,000. So I mean, we'll get those numbers next time we come on here.
I checked yesterday on the 1st.
Yeah.
In the last 30 days, we had sold 2,080 homes.
Yeah.
So if we pace that out, which going into Thanksgiving and Christmas, to say that it's going to be any more than that would be very different than any other market I've ever been in.
There's not a lot of sales.
So you're probably looking at, 6,000 more? So you're looking at about 29,000 homes.
Yeah, thankfully, we have some tight supply, so it's kind of keeping the real estate market from tanking on us, right?
Yeah.
So,
yeah.
But, look, rates are obviously why everything's in the turmoil right now, right? I mean, let's face it. You've got a good pulse on what's going on with interest rates, and we're getting a little reprieve this week. The Fed met, and hopefully they didn't raise their short rate. Hopefully they stop doing that, and we start seeing better inflation numbers, because some of the stuff that's keeping us down is lagging, and so it's coming around. The jobs numbers that we've seen lately are kind of head scratching, right?
Well, they're cooking the books on some of those.
Okay,
so
I
it's
didn't
like
say
no,
that, but you did.
they can't really. I mean, I know 70,000 of those people going back to work were teachers that were going back that had jobs last spring, so now they're going back. So it's like they can only hide the data, and not that they're trying to intentionally hide it. I'm not saying that, but it's like, we can only use the data to I guess, prove a point to a certain degree. Yeah. And it's like, well, if we keep going too long, we don't want to kill the economy and kill everybody, jobs and everything too.
Kind of what they're trying to do, it seems like. But we need to see the economy slowing down. It's just not slowing down as quick as we think it would. But it's going to come.
I mean, even the stock market's pretty resilient.
Well, yeah, that never goes down. But I've seen every stock I pick, I don't do well with. But look, people that are thinking about buying right now, look, they've got a lot of questions. Some of them are nervous about buying right now, and because they want to wait for rates to drop. Like, what are you talking to with your clients that are, maybe sitting on the fence?
Well, right now, I guess what I ask more questions. Why are you even thinking? What's causing you to want to? What do you not like about your current home?
Sure.
Or your current situation? Why you would even entertain at the cost of what things are right now?
Yeah.
And, I kind of look at it like, somebody that maybe bought a, $350,000 house that's worth $500 now, and, they got a $1,700 payment. For them to justify it, let's say they had a couple kids and now they're, they took an in-law in and they gotta expand, does it make sense to buy that $650,000 house? So I have the equity, I have the down payment instead of an FHA, and now I'm putting a conventional payment down. But does it make sense for me to go from a $1,700 payment to maybe a $3,800 payment?
Sure.
I mean, that's more than double.
Yep.
And, I guess I look at it like, it depends on your situation. I'm not going to convince you that's a good idea. Sure. I'm not going to tell you fiscally that's smart. However, if where you are living is not serving your needs, whether like, I don't know, if you have children, they want to get a different school district, you need a different proximity to medical facilities because you got aging parents, or, there's a whole bunch of different, or you got a horrible neighbor that you just can't stand that are up all night and keeping you and your family up, or whatever it is. Do you want to stay in that? And I look at it like, if I had a job where I made, I don't know, 150 grand a year, and I did really well at that job, but my boss was awful, and every day I went to work, I wanted to freaking, off myself here. Does it make sense to take a decline, a 20, 25, 30% pay cut to have a job where maybe I have more time and I enjoy my life more? And that's kind of the decision you need to make. And then, is this a long-term decision? Like, are you planning on leaving? If you might get transferred in 3 years or something like that, and you have that kind of a career, you're in the military, I'm not going to tell you necessarily have a lot of equity, you're going to be able to refinance in that time. But if this is a long-term situation, and you're planning on this being forever, obviously we can't predict the future, but you're planning on this being in the future, then does this make sense to make this move now? And I look at it like 20 years ago, if I bought a house in 2002 or 2003 or something like that, would I be mad if I paid more than I wanted to at that time?
Sure.
Would I be mad right now?
No, of course not.
And I believe the rates in 2002 were right around 7-8% at that time. Obviously, the prices weren't even close to the same, but even at that point,
wages and incomes,
or wages or incomes either. Yeah, exactly right. So, and we were going just off the dot-com boom and the bust of the dot-com at that time. But I don't think anybody's upset if they bought a home in 2002 or 2003 now, because they've made money.
Yeah, everybody's got their situation. It's not our job, like you said, to convince anybody to do anything, but it is our job to give real information, because they're hearing a lot of noise from the media and people that don't do this for a living. And we need to at least provide the data and the facts so that they make the right decision, because I've been doing this for a long time and I've heard a lot of the reasons why people aren't going to buy. Ultimately that wasn't always the best decision. And it's not always the best decision to not wait either.
Yeah, but at the end of the day, many analysts are saying the market's going to go up nationwide 3 to 4%. Now, is that what we had the last 2-3 years? No, of course
that's
not.
what a normal market
But
does.
that is a normal market. And man, where else can you make 3 to 4%? You can't do it in the bank.
No.
Where else can you predictably make, say, 3 to 4%? In some markets like Indianapolis, other markets around, somewhere in Maine, a couple other ones, where you're looking at 10% is projected in certain markets. So it's like, where are you going to make that much money? Where it's not like a piece of paper. Like, I live in this house. So it's a full, I'm not only just getting the investment, but I'm also utilizing the utility of the house.
Yes, there's some benefits in that as
Exactly.
well, right? Yeah, so look, again, we can't promise anybody that you can refinance in the future. Rates are going to come down. No one knows when, right? But we need to see some certain economic data that's going to start prompting rates to go down, and hopefully you can refinance. But at the end of the day, when the COVID years, trying to buy a house like a first-time home buyer, that sucked. You have a chance now. You can get seller concessions. You can do strategic things to, get your interest rate lower right now. And then hopefully, when they do lower, you have the ability to refinance, right? Because like they say, always the best time to buy real estate was what? 5 years ago, right?
Yeah, exactly.
Right? So, with interest rates being so high, the affordability is tough right now, and we're seeing some different strategies that people are using, right?
Yeah, what are you guys doing? Because obviously that's more on you guys. I mean, we can write the contracts, but I need to talk to you.
Well, there's not a whole lot. We
need
need the help from you as well, and really dive in and figure out what their needs are. But obviously, getting seller concessions, right? Like getting a seller to pay anything, prior to this was like getting a bill passed through Congress.
People
right?
waived inspections for God's sakes 2 years ago.
So now, we're with those concessions, people are electing to buy their rates down, right? Sometimes permanently, which you're not going to get as much bang for your buck. Those temporary buy downs that can get you 2 or 3 years lower or percent lower for those respective years, right? And graduates up. Builders, right? I hate to say this, but they're giving great incentives to buy houses, right? Typically, you have to use their lender. That's why I hate saying this.
You have to, pretty much.
Right? And then Look, there's some programs. We have a community lending program right now. It's zip code restricted, kind of in the northern part of town. And
is this nationwide or is this just in Las Vegas?
it is. It's nationwide. Yeah,
okay.
yeah. So, well, it's in certain counties. So I have the map, and I'll share that with you and anybody that's watching this. But last month, we one was a refinance, believe it or not. One was a purchase. One was a purchase with your team, actually, and the rate was basically about a point lower than the normal market rate, right? And it's not income restricted like most of these programs, right? Or first-time home buyer. It's literally once we plug in the address and price it, it'll pop up and it's eligible for that. So that's one way.
I know. I'm assuming this is to live. Investors, don't get too excited. I think this is to live in the home.
Yeah,
correct?
it's conventional product, primary residence.
Okay.
Yeah. Manufactured properties. I've done more of those in the last year than I have my whole career, right?
Wow.
People are looking to get, to buy a house, you got to get affordable, and that's certainly more
Pahrump
affordable.
is also blowing up.
And unfortunately, Pahrump's blown up, and now they're not eligible for USDA loans because apparently they're not as rural as they used to be. So, and then condos, we're doing a lot of condos right now. Even like if they're FHA, that's tough to do. But we've actually last month, 2 condos that weren't FHA approved through the association, we were actually able to prove those specific units. And it wasn't that hard, right? So, and then even
that's great that you're willing to do that.
Well, you have to do stuff,
right. Yeah, but you'd be amazed. Oh, it's not approved.
Well, that's what I got both of those deals because
awesome.
their lenders told them there was.
I was going to say,
right.
absolutely. You probably that's a service that people just don't want to make that call. So good for you. Good on you.
Yeah, and even like right now, I locked a deal for a lady who lives in Hawaii and she's buying a second home here. Her house in Hawaii, free and clear. It was way cheaper to do a cash out refinance on that than buying a second home, right? So just, again, it dives down to figuring out what their needs are and really talking to the client and figuring out their goals and making the best decisions. Yeah, so look, there's no magic bullet as we know. So, but with selling a property, people aren't selling because their rate's so low, right? And then to get this higher rate and then, they just can't stomach it, right? So it's more life events is probably what you're seeing with people selling.
Yeah,
right?
I think so. There are some, believe it or not, though, there are some that are like, whatever, the rates are the rates. Like,
Sure.
I have investors that's like, I don't care about the rate. It'll change once in a while, and as long as I'm making money, I'm holding on to it. They understand.
The cap rate.
He's got a bunch of properties.
Right. If that works, then it works.
Yeah,
right?
that's and even for people that not everybody is that rate sensitive. They're like, they're sick of being on the sidelines. They're sick of having to pay rent. They're sick of their landlord deciding to sell, and now they're uprooted from their property or whatever. Now they got to find another one with the rent prices, and they're like, oh, I'm not building anything for myself. So, from the buying standpoint, it's somebody that doesn't sell. But as far as the sellers, it's a weird thing because, like I was saying, they're paying they're paying say $1,800, $2,000 mortgage for a pretty nice house that's probably worth $500,000 now.
Right.
So for them to maybe upgrade it, I'm seeing more downgrading if they can pay majority cash and have a really low balance, or maybe even just pay cash completely. But again, I guess I don't want to beat it to death, but I mean, if you're not happy with your living situation, your commute's 45 minutes or whatever, it's really up to you. I'm not going to tell you should do anything, but how important is that extra hour and a half in your life if you can move, 10 minutes away versus 45 or whatever it is, how important is that to you? How important is, wherever you're at? And if you're super happy, you love your house, you're at 3%, my God, stay.
Yeah.
Don't sell.
That seems to be what they're doing,
yeah,
right?
So
I think we'll probably need to see rates in the 5s again to really see move the needle to see a bunch more inventory.
I don't know if that's going to happen for a while.
No, it might not. I don't think it will either. So
I think we'll be lucky to get 6s.
We're going to be in a tight supply this scenario for a little while here, it seems like. But, again, things change very quickly overnight sometimes. So who knows?
It's true.
Very
true.
Lastly, I know we'll talk about this a lot more because we're supposed to keep this to 10 minutes, but the big NAR lawsuit. Give me like 2 nuggets or your opinion on that. We'll really dive into that next time. Well,
obviously, I'm coming from a biased perspective of a real estate agent. So, but I do want to say there is some of this lawsuit I don't think is not warranted. And it reflects on buyer's agent's compensation within the listing agreement that there was supposedly in certain markets. I think there's enough evidence in Las Vegas that this doesn't really happen, but this was a nationwide National Association of Realtors were sued based on the fact that the real estate agents in the association were price fixing buyer compensation, basically saying a salary, here's what we have to pay the buyer's agents to get your house sold. And part of that I chalk up to agents need to be better at explaining this and explaining the value of that. And some of it's crap, though. Like the basis of the lawsuit, I know the couple that sued, they agreed to the listing price, and they agreed to the agreement. They were happy with the service, and then afterwards they got mad and felt they paid too much.
Yeah.
So, and they decided to do this whole lawsuit. But, you know, at the same time, I don't know them. I don't know that particular situation. So for me but that's how I understand it.
Yeah.
You know, obviously I'm hearing from a skewed perspective from real estate agents.
Yeah.
But I do think it could affect, I'm hoping it affects things for better and causes our service to be better.
It will. Yeah, exactly.
But we're going to touch more on this because there's a lot of goofiness with this that I'm withholding right now for a later podcast.
Certainly could change the whole landscape of everything, right? But I don't think there's going to be some appeals and stuff like that. But we'll hit that next time we see you. Good to see you.
Well, Dustin, pleasure, man. Thanks for having me on.
All right, take care.